right, so tonight we're here to talk about shadow bands, and they're really a double Fibonacci based price channel corridor measurement tool. Provides intraday and specific time period potential support and resistance. How's that for a title of the session? Yeah, you're right, Jackson. I probably won't have a Monday. I'll make an announcement about that. Thank you for reminding me. So, for those that are new, you could take a screenshot or just watch a replay. But as I've said, I've been trading since about 2003. I've been a coach. For actually the first Forex MLM that existed, a company called FX Trainer. I was a director of training development at a company called FX Partners. I founded my trading company called Pip Club. I got a PC Magazine Editor's Choice Award competing against 48 other financial products. Got an Inc. 500 Fastest Growing Company Award. I brought the first technical analysis product to the IBM PC platform. I got the first over-the-air real-time financial quotes. I'm the creator of Harmonic Wave Convergence, which is a way of trading to bring extreme precision to your trading. I've created the Pitchfork Mastery course that I do give out, and I'm the creator of Charlie Delta Trading. I'm an IML master educator for both Forex and crypto in the IML TV session. I've spent a lot of my time in the last 7 to 10 years in the neuroscience niche of self-development and self-growth. I've got life coach certifications, motivation coach certifications, more life coaching certifications. I got about 3 of them. Law of Attraction practitioner certification, an NLP practitioner certification, cognitive behavior therapy certification, and a certification in neuroplasticity. And a few more, but I'm not out here to brag. I'm out here to just say I come from a position of strong research and experience. And my goal as a trader, and people, why do you coach? Because I like it, for one. And 2, I want to touch people's lives. And if I could take my 15 years of experience and compress it down, what I'll do is accelerate your time to becoming a successful trader. So that's what I do. So let's talk about shadow bands. So shadow bands are something that fit in with and trade in alignment with the new paradigm, as they are real-time indicators. They have 62 base technology. Now, a lot of you might go, what is that? And I'll share that with you in a few moments. They are essentially 30-minute based, but don't let that scare you if you trade other time frames. It's perfect on any time frame. At the 30-minute level, there's some reasons why we trade the 30-minute level, and the 15 goes hand in hand. It's kind of like the kissing cousin to the 30. But they are MTFA compliant, which means MTFA, if you're not familiar with the term, is multiple time frame analysis. So we can take the 30-minute system and drop it on lower time periods if we want. Okay, especially if you're using TradingView and something other than the free charts. You can actually turn on visibility for stuff in TradingView. This indicator, doesn't work with visibility, but we've built visibility into it. So we can take our 30-minute system and drop it down to a 15-minute chart or a 10-minute chart or a 5-minute chart or a 1-minute chart to trade with precision that 30-minute move or that 15-minute move. Case in point, a 15-minute harmonic scan. We can trade, and our typical way of trading that is to drill down to the 1-minute chart. So I can bring my 30-minute shadow bands, which I would use for my 15-minute trades, and I could bring that all the way down to the 1 minute if I want to. The charts are in the TradingView library. It's not an invite-only script, but it does require a password in the form of something called an enable code. And that's at the client level. In other words, as you're operating it, it's not coming from TradingView, it's coming specifically from our indicator. So here's the deal. We can configure this at many levels. We can configure it with many colors. You can choose which bands to display. And you can actually have true multiple time frame analysis done with it. We can use for system level trading, which would be the 30-minute system, 15-minute system, i.e. harmonic scans, etc. But you can have specific time period trading as well. So if you trade a 10-minute time frame, you're going to have the option of putting your 30-minute shadow bands on your 10-minute charts, or just running the shadow band system on the 10-minute charts locally, meaning with the scale of the waves at the 10-minute level. So it's kind of can use it two ways, and we'll go through some examples of that. It's a super confirmation tool. So you want to use it with other criteria to bring higher probability trades. So it's not a system in and of itself. Just like Fibonacci should not be a system in and of itself, just like Pitchfork should not be a system in and of itself, you want to stack your probabilities as a trader. So let's talk about the EMA 62. So this comes about from a 2-year study where I looked at all moving averages, and I mean all, EMAs, SMAs, WMAs, in all time periods. And I looked at that study for 2,000 trend moves with swings on 4 pairs, figuring enough distribution in the majors there with the euro, the yen, the pound, and the Aussie dollar. So 2,000 trend moves. And had some hypotheses going in, but the real goal to do it was to observe and see what happened over a volume of moves. Finding something that works in a run of 10 means nothing. Okay. Finding something that is consistent over 2,000 moves is a little bit different. So nothing, and I mean nothing, came close to the EMA 62. Now there's a reason for that, and that's because the EMA 62, as one of a couple other EMAs, really represents 61.8. So we're talking about phi, the opposing number to phi, which is 1.618. So it's a Fibonacci-based moving average, but more significantly, it ran circles around everybody else as far as being middle of the road during a trend, as far as being a rolling Fibonacci a large percentage of the time. We don't do a lot of trading up, but you could put them on upper time frames. But we don't trade a lot of upper time frame stuff. We can, but we don't. And the reason we don't is because with just 5 pips a day in the new paradigm, 5 pips a day, 5 days a week, in 24 months, I have $1.4 million. And that's only with a 2% risk. So we don't do heavy risking. It has to do with our stop loss, and you need to watch the risk videos. So we don't chase big moves. We don't chase any moves, actually. We set traps and wait for price to fall into our traps. It's a much more comfortable way of trading. It's a way of trading that aligns with positive psychological growth. And so we don't need to go for big pips, which is a real blessing if you want to be a trader and have a lifestyle. We don't have to set our alarms to chase the pound yen during the London session, unless that's the time you routinely trade, because that's your waking hours. So it's a lot different, and it's okay if you're used to something else, but once you understand the risk, once you actually understand the math and how money is made as a trader, then your eyes kind of open up to the possibilities. And the new paradigm is there to address all of those possibilities. I'm not saying you can't use it. It works perfectly well at upper levels. It's just there's no mathematical need to trade upper levels. And that's all I'm saying. See, those guys that talk about the 600 pips they made last week, we can make the same amount of money, assuming same starting accounts, assuming same risk in trades, Those 600 pips, we can make the same amount of profit in 60 pips of trading. Not always. Sometimes it takes 120 pips. But it's a huge difference. And so we don't have to catch the big moves. We can just catch a handful of smaller moves, which are much more frequent and much more, how would I say, even in the high percentages and laws of distribution, they're much more psychologically aligned because the frequency of them and just the wee bit you have to recover if you do get stopped out. So I can't go through all that now. I'm not here to teach risk tonight. I'm not here to teach, in-depth old paradigm versus new. You have to trust me, but you can prove it for yourself by watching the videos, which are nothing but math-based videos. All in the pin post of our group. So the 62, unlike any other moving average, provided a middle of the road. Much like the center line of a Bollinger, price loves to come to this. In fact, when it gets within 21 pips of the 62, that's 21, not 2. From 21 pips out, price reaches the 62 a staggering 87% of the time over those 2,000 trend moves. So from 21 pips out, the 62 has this strong magnet to pull it to the center line, that middle of the road. And again, twice as much, 3-4 times as much as some of the other MAs that seem to be very popular out there. So the 62 is performance based, and that's why I trade it. But I've done my study on it. I've done my analysis. And the EMA 62, we've used that in many different ways as we've moved forward. So here's a little example. Oh no, if I can blow this up. Yeah, it looks like I can. So old slide with the pitchfork, just one where the 62, you can call it coincidence if you want, but the 62 at the time price was interacting, it was also interacting at the median line. That's pretty special. And so you can see here, I call them double tests. Okay, there was a test here and a bounce, and there was a test here and a bounce. 62 has that power to suck it in. Okay, over on this side, we had a test, but I wasn't so much concerned about the double nature of this test as I was where it went afterwards. Okay, and again, nice move up to the top of the pitchfork, right back down to the median. And now we have a pack move. Those not familiar with pack moves are moves on a support and resistance line that identify the strength of it. And those generally mean you have some sort of time where price bounces, it comes through it, and it goes back and checks it. And then generally that's a very impulsive move down. And then one more, okay? Interaction with the 62, another pack move. Price finally breaks through it, comes back and checks it, and then takes off, comes back and checks it again, and then takes off. So you'll see these kinds of moves very common with the 62 frequently. Okay. It is a very strong money magnet. All right, so here's the 62. A little blurry, but I said it's a rolling Fibonacci. And what I mean by that is you will see frequent occurrences of when you have an aggressive move in a trend that sometimes you don't even need the Fibonacci. It's going to come back and bounce off the 62. And almost always that bounce is going to be on a Fibo line. In this case, the 38.2. It's really good at finding those three, the 38.2, the 50, and the 61.8. Again, demonstrating the power of the 62, where it is double confirmed because your Fibo is right there on top of that bounce. And again, you'll see that frequently. So again, just a real strong reality, and I'm just kind of rush through this to give you the power of what's going on there with the 62 above all other moving averages. It's not a bias. It's not just an opinion, it's fact. So I did this in the Fibonacci class if you didn't see it. If you did see it, hopefully you remember. So the question here is, if you look at the chart and see what you have going on here, you obviously had some move, some sort of correction phase, a breakout, false breakout, or a breakout in one direction, comes down, a downward trend ending, and then an upward trend. So what do you see in common in this chart? What do you notice about price movement on this chart? More so, what do you see that is consistent on this chart in all of these moves? What's consistent there? Because there is something consistent. The reality is you just don't see it. Now again, this is part of RAS. This is part of your sensory information gateways. You've not been taught this, so you don't know how to screen in the information to see it. So what exists here are places where the price movement is defined by the shadow bands. So here we have our shadow bands. They're 62 based, so that's one form of Fibonacci. It's a rolling Fibonacci. It's not just a moving average. It has a huge attraction ability. Again, 21 pips out, 87% of the time, if it's heading in that direction, it's going to get to the 62. 13% of the time it doesn't. Don't look for the exceptions when it doesn't. Look for the 87% of the time it does. But more so, then there are Fibonacci sequenced bands placed off that Fibonacci-based moving average. So 13, 21, 34, 72, which is a derivative. I'm not going to explain where that comes from, but just trust me. 89. So Fibonacci ratios, sequence numbers out from a percentage-based Fibonacci. That's why I say it's double Fibonacci-based. And you can see how it traps price, how the price gets into these corridors of movement and stays there. And again, these aren't things you can see in looking at the chart without the shadow bands. And so these corridors exist, again, in these Fibonacci. It's not predictable in terms of rise and fall. It's predictable in terms of the corridors. And again, this is not a single-use indicator. You want something else to bring you confirmation, be it Fibonacci's for things like reversals. Okay? So things like Fibonacci are elements of our INS system. If you don't know what the INS system is, well, you missed out on a big free session there as well. I would venture to try and get the link to the INS system. So great moving average in terms of what it does. It's a rolling Fibonacci. Price respects it. It has a strong magnetic attraction, which is why we call it the middle of the road. Anytime price interacts with it after a trend move, it's almost always a Fibonacci. And price loves to test this line quite a bit. So the bounces off of it are typically pretty significant. So here's the example I put up from the Fibonacci class. Again, this is a 30-minute chart. And these are shadow bands on that 30-minute chart. And I've circled the reversal points with the to the pip touches of reversal. Again, pretty significant. It's 21 pips. 21. All right. So, let's talk about shadow bands. And I need to do one thing, because I didn't do my job as well as I should have. And let me see here. There we go. That's what I wanted to see. All right. So let's walk through this real quickly, and then we'll go look at this on live charts. So we're going to start with 30-minute charts, but don't let that discourage you if you operate on other time frames. As I said, we will show you how it's okay on other time frames. How do you get it? You go to your trading view chart, you hit the indicator tab at the top of your chart. This panel pops up, okay, for indicators and strategies. You click on the public library option. You click on the search, and all you have to do is put in PC space dash and start to type SH, and shadow bands will show up as searchable in the public library. It is not locked. It is not invite only. It's there and available. And you click on that, and it puts it on the charts for you. So we're going to go look at the format button. As I said, it requires an enable code. So you're going to want to take a screenshot of this. Right now, that enable code is for May 18, all lowercase. Please don't send me a Facebook message tonight asking what the enable code is. I'm giving it to you right here. That's like a password, and you'll see that in a moment. You can display the bands, turn off certain bands. You can do upper bands, just the upper half bands, or the lower bands, and those bands above the 62, bands below the 62. I can run them both. You can set it as the local indicator, and that just means time period specific. So if I put this on a 10-minute chart, I'm going to have shadow bands on the 10-minute 62. Unless I say use my 30-minute shadow bands and put it on my 10-minute chart. And again, we'll see what that looks like. For those of you trading scans and whatnot, that's what you would do. Your 15-minute scan, your 30 and 15, as I said, are kissing cousins. The systems and the Fibonacci-ness of the waves move at the same levels between 15 and 30. And so I may be somebody trading my 15-minute scan, and I want to drop the shadow bands from my 30-15 time frame down to my 1 minute to trade that 30-minute system and to see where the 30-minute shadow bands are on my 1 minute chart. Or I may just want to put it on because I'm doing nothing but 10-minute trades. I'm doing burst trades. I might be a scalper in 1 minute trade, so I would use the 1 minute shadow bands. I wouldn't use the 30-minute shadow bands because you're not trading 30-minute wavelengths. You're trading 1 minute wavelengths, so you want the harmonics of the 1 minute chart. Again, we'll see that in the format in just a second. You would always want to use it with other support and resistance. You want to get multiple levels of probabilities working in your favor. That's what successful traders do, is they stack their probabilities. And as always, when you're using support and resistance, you want to seek energy points, and that could be any number of things, any of the components in the INS system. That could be Fibonacci, that could be pitchforks or trend lines. Lee Allen teaches Murray math lines. You can use those. So any number of other systems to bring additional confirmation. So what we're going to do then, now one more time, take a screenshot of this page. Don't say, it doesn't work when I put it in. There it is right there. I tell you what to search for. I give you the format right here, PC space dash hyphen dash shadow bands. By the time you type SH, it's pretty much going to bring this up. I'm giving you the enable code. Take a screenshot of this. I'm going to give you 5 more seconds. All right. So got a 30-minute chart on here, some other pitchforks. Hopefully it's not going to drown it out, but we'll just see this. So here we are, real time, live. I'm going to go up here to indicators. I'm going to check on public library. I'm going to type PC space dash space SH. And there, look, oh, just like Steve said, there it is, shadow bands. All you have to do is click on it, and it's going to put it on your chart. Now, I put it on the chart and it's not clicked on red as in hide. So where is it? Where are those damn shadow bands? Well, remember I said enable code. So when we open the format box for this, there's your enable code first thing. So I'm going to type for FOR May 18. And I'm going to display upper shadow bands, lower shadow bands. I'm on a 30-minute chart, so this is going to show me the 32 system. Now the first thing you note is it compresses price. That's okay. There's two ways of dealing with that. One is just open the chart back up and it won't be so compressed. Or two, you can stop some of the compression by just measuring how far price is going out in the current runs and then just disabling the other ones. These, in other words, you can turn these outer bands off in the format box. And when you turn those outer bands off, then you're going to eliminate the compression. But like I said, TradingView is pretty cool. It lets you just open the chart back up and defeat that compression if you want. Absolutely. Cha-ching. So, shadow bands are like other support and resistance systems. There are some days they're going to be good. There are some days they're going to be great. There are some days price is going to move through all of them for hours and hours, a day at a time, as like a hot knife would through butter. So don't worry about it. Use it where it works. And, I didn't do anything. I mean, this is the euro, but you can see where you'll have good hits, where specific zones are established. Now, again, these are 10 pip channels. And remember, when I go from one shadow band through the 62 down to a shadow band down here, I've just traveled, by this term, that's a good 20 pips. So that covers Monday through Thursday worth of trading. 5 pips a day is all you really want to look for. Those of you who go, I want more than that, watch the Physiology of the Brain video. So you don't need huge moves, but you can see very specific touches. If we go back just a little, maybe. There were some really nice ones up here for big gains. And several intermediate ones that bounce. You see the stagnation at the 62, the consolidation, then it breaks through. A bounce here, nice pass and check to the shadow band there. And then more movement. Now, it's as markets go, like I teach in all my trading, I don't like really wicky times on the chart. So right now, the euro is going through a lot of wickiness. And so, at the 30-minute level, I don't like what I see there. I probably would not be trading at that level right now. Too much indecision with frequent wicks of this size. That's why I don't, maybe only 10 or 20% of my trading is pound yen, US yen, because they're pretty consistent with wicks. All right. So there's a lot of hits, but there's a lot of no hits too, where price just goes elsewhere. And look, don't worry about it. We set traps. We're trap traders. So it's totally different than doing entry orders. See, and that's why we react to price. We don't try and predict price. We react to price. Entry orders, you have to have a big fat stop loss to accommodate a big stop, because that's what happens with entry orders. And if it goes through your entry order stop, you're done. So we don't deal with that. We don't chase trades. That's all it is chasing trades. And it might take you 1, 2, or 10 years to figure out you don't want to chase trades. It's the hardest way to trading. It's the least successful way of trading. You want to trap trades. You want to say, hey, price, go ahead and come to this point. And when it comes to a double energy point or whatever. There you go. All right, one more look at this, and I want to explain this panel again. So when you just put it on, and you put it on a 30-minute chart, you're going to notice a couple of things. One is that the center point of this move is this blue line right here, which is the 62 EMA. That's a color coding standard. If you see a 62 EMA and it's blue on any chart, we know that's our 30-minute 62. We will use that 30-minute 62 and put it on our 1-minute chart. So in this install, I'm putting this on my 30-minute chart. And what does I say about this system as it is? It puts on a local system. So if I'm on a 30-minute chart, it's going to put on a 30-minute 62 EMA. But I have the option, as you can see, of saying, I don't want the 30-minute 62. I want it on this chart. I want to go to a lower time frame and put on the 30-minute 62. So again, yep, that's right, cha-ching. This would be for people who are trading, let's say, a harmonic scan, and they want to drop down to, actually, I do have a 5-minute. Hold on, I'm going to get price up here. Wow. 178. Yeah. Sorry about this. All right, we're getting there. See how it comes in. All right, so there's our 62 from another indicator. That's from our MA indicator. And so there's our 1-minute chart. Oh, way too spiky for me to be playing with, but whatever. So you kind of see it goes through its phases. Some days the Euro USD at the 1-minute level are going to have spikes, wicks that are only 1 pip, 2 pips. And then there'll be phases during the day or during several days that it gets kind of spiky like this. Again, not for me, not a time to trade. But let's put shadow bands on this. Okay. So once I come down, and I've got it on my chart, I can just pick it off my scripts and put it on. Once again, I'm going to have to first time enter the enable code, which is what? For May 18. And here, I'm going to say, I want the 30-minute system to be shown on this chart, and it'll put it on 30-minute or lower charts. So I can put it on a 15-minute chart, a 10-minute chart, a 5-minute chart, a 3-minute chart, a 1-minute chart, and you can see those bands. Now, one thing you have to understand is scale. So what's considered a hit, excuse me, when you have a 5-pip scale showing, there's a 1 pip tolerance is still what we would consider a to the pip touch. And the way TradingView works is we bring these things in, it zigzags the values at 1-minute levels. But here's the thing we have to do to help us. So if you ever post shadow bands, not only will we be able to tell the wiggle, but what you want to do to be more correct, if you will, is go over to the format and go to style, and that 62 on a 1-minute chart should be white. And I'll show you why in just a second. Oh, excuse me. I want it on there. I just want it to be white. And again, I'll dump it, make it twice as big. Oh, wait, no, this is the 30-minute. My bad. Oh my gosh, I'm telling you all wrong. So, pretty good. You see from our 30-minute MAs and the shadow bands how it puts the 62 on our chart. Okay? And then the shadow bands out. Now, That's if I'm trading, let's say, a 15-minute scan and I want to bring it down to my 1-minute chart for perfect execution. What about if I instead didn't care about my 30-minute shadow bands, but I just want to trade shadow bands at the wavelength of the 1-minute chart? So I take this off, and now I'm going to hit 1-minute shadow bands. All right, you see the 30-minute 62 is up here. Bands aren't associated with it now. They're around this, which is the 1-minute 62. And again, what I would do then is go to my shadow bands, and for style, I would make my 1-minute 62 white, and again, double it up a little, make it a little bit thicker. And now we're good, and I've got shadow bands with my white 62 EMA. It's going to change when we change it. We're going to open up some indicators. We're going to close some down. We're going to group some. So right now, as I say, at the script site, we came up with this for some potential business reasons. The enable code is a lot easier to administer than is authorizing a particular individual. TradingView is not user-friendly in terms of invite-only scripts. They were never designed to facilitate, though they were never designed to have 1,000 subscribers or anything like that. So it's very difficult to add and delete people from the TradingView authorization list. The enable code is much easier. And so there'll probably at some point be a password accessible website which will have enable codes depending on your level of authorization. So right now I'm letting you use it, but as I say at that site, it can change. The enable codes can change tomorrow or just go away and limit, keep it as a lockdown, if you will, source. So right now it's probably not going to be changed monthly unless something happens in the next 30 days. So they're there for your use. So that's it. So you just have to understand that it has those multiple time frame capabilities. It's built for the 30-minute, 15-minute charts. That's what it was originally based on, but the 62 is the middle of the road for all charts, all time periods. And so if I want to put shadow bands on a 1-minute chart, because essentially I'm scalping, I can do that and maybe get, some benefit. Now, I can actually put my INS system on here just for grins and look for some common things that may give me energy points. I'm going to take off my harmonic targets and put on Camarilla lines. Not seeing, well, we're pretty zoomed in too because this is 1 minute. So I'm not seeing anything in alignment there. Although you'll see, in various spots the cam lines are bouncing things. So I'd be looking for them to do it at the same time. Let's put on our Fibbo pivots. And we have a nice little energy point down here. Here's another nice energy point bounce. Fibbo pivot intersecting a shadow band. Down here, Fibbo pivot intersecting a shadow band. Big moves off that. So could the individual time frames overlap at some point? And from experience, if they do, what do you mean? You talking about like if I have shadow bands on a 1 minute chart and shadow bands on a 10-minute chart and the shadow bands overlap? Or they create an energy point? Yeah, I mean, you just have to find what it is you want to trade. If you're on a 1 minute chart, I would use 1 minute shadow bands if I'm trading, if I'm scalping. If on my 1 minute chart, because I'm drilling down from a 30 or 15, I'm just going to have my 30-15 on there. I'm not going to be worried about 1 minute shadow bands. And it doesn't mean that they can't overlap and create a hit, but you have to think about waveology for a second. See, that's why these are tuned to these moves at the time period. If I'm trading a 15-minute or 30-minute move, I'm not interested in 1 minute termination points until it's that same one that they all terminate at. That's a convergence point where the last 1 minute wave converges with a 15 or 30-minute wave. So it becomes too squirrely. So I would rather use different sources for confirmations or for energy points and not two sets of shadow bands. It's kind of hard to watch. I would prefer to have my 30-minute on my 1 minute chart and to maintain 30-minute support and resistance, which is why the INS is good for that. It's an intraday system. Of course, Fibonacci. 1 minute scalping. There you go. If I'm trading 30-minute, I'm not watching the 1 minute chart. I'm watching the 30-minute chart. It's only drops to the 1 minute chart at the point of execution. So you don't track and manage your 30-minute trade from a 1 minute chart. It's only there to magnify things at the entry point, and then you're done with it. Maybe you need some clarity sometimes for a price point to eliminate more slush, but other than that, you don't trade 15-minute scans from a 1 minute chart once you're in the trade. It's no different than anything else we teach. If you're trading pitchforks, if you're trading harmonic scans, you drop to the 1 minute chart for entry. This will just bring confirmation. And again, I'm not going to use 1 minute shadow bands for a 30-minute system. I'll drop my 30-minute shadow bands down because I'm taking a 30-minute trade. If I'm trading a 15-minute scan, I'll drop my 30 minutes because again, 15, 30, kissing cousins. The wavelengths are about the same. They measure the same way. 10, you're starting to separate, and you really need to measure 10 in a different way. But if you're, when I say that, I mean if you're only trading 10-minute trades, what we call burst trades. But if I'm trading a 30-minute, and the reason we can call 15 and 30 the same is because harmonic scans are overly sized for 15-minute charts. There'll be multiple 15-minute waves in a run on a 15-minute scan. It's more attuned to a 30 and 60-minute chart or move. It's a 15-minute scan. That's why the 30-minute shadow bands work for 15 minutes. So I would just drop my 30-minute shadow bands down to my 1 minute chart for execution purposes. I don't want to use my 1 minute shadow bands for a 30-minute trade. They work on all currency pairs. So currency pairs are going to be a function of how many charts you're running per pair and, quite frankly, what your system setup is. Other questions about shadow bands? Yeah, they're pretty cool. Don't worry about it when they're not on. I just ran through INS, and there's some days where the INS, as I've said in the INS training, there's some days where pivots are super hot, and some days they just go through the price lines, those pivot lines, like, hot knife through butter. There's days where Fibonacci is hitting on all cylinders of the engine. You 23.6, 38.2, 61.8. You get good small retracement bounces, etc. And then there's days where you go, geez, what's wrong with this swing? I'm not getting any hits on any Fibonacci lines. Don't worry about the stuff that doesn't work. You don't make your pips there. Don't think about the negative. Focus on the positive. You know, in self-development world, you know, the way you get more abundance is to have gratitude for what you already have. And those of you who don't have gratitude journals, you might think about it. The way you gain more abundance is to have gratitude. And you don't have that whining about what you have. You don't say, oh, well, it didn't give me any hits today. When it does, I'm so blessed to have this and thankful that I can take these trades and get these hits. Don't worry about what doesn't work. One last thing, if you're trading even 1 minute, okay, even 1 minute, and you're doing scalping at that level, you can draw pitchforks on your 1 minute charts. It's something you should do in the sequence. If you work in scans, you draw in 15-minute pitchforks, and you draw many of those, then drop down and draw some 10-minute forks. Drop down and draw some 1 minute forks. And you'll see all of a sudden that this concept of scalping isn't scalping anymore. You're catching huge by wavelength, you're catching bigger 1 minute moves than is typical. They're more like burst moves. So you can put a pitchfork on your 1 minute chart, a true 1 minute pitchfork, and put your 1 minute shadow bands on and trade 1 minute scalps. You could put a pitchfork on your 10-minute charts, trade the 10-minute system, and take burst trades that are perfect because your criteria is very select. It's not just random, oh, this, it looks like a reversal candle, I better take the trade. You're taking them because of high criteria. Same thing at 15. Okay? But if I'm trading a 15-minute scan, I'm trading a 30-minute, pitchfork, use the 30-minute system. You drop to the 1 minute just for clarity, but it's still the 30-minute system on the 1 minute chart. What do you do? What do I say when you're trading? Know what you're doing. Know what you're trading before you sit down. The challenge is the stuff I teach has lots of flexibilities for time frame, for lifestyle. The problem with what I teach is there's lots of flexibilities, there's lots of lifestyle opportunity. Meaning, if you want the step 1, 2, 3, 4 system, you belong in another place. What I teach you is the reality of support and resistance. I show you the multiple realities of Fibonacci on the chart and how to set traps. And when those indicators are hot and they create energy points, you will have a successful impulsive move. Well, so Mackenzie, you've got to go through. Wait, am I looking at the right person? No. I don't know how you pronounce it. MOECS1. You've got to go through the pitchfork course first. And then you have to understand Fibonacci second. And then you'd be smart to understand the various support and resistance systems we have. And then you'll understand how to set a trap. Come back on next Wednesday and watch us go around the world with multiple pairs as we review pitchforks, and we show energy points, which is your trap. Energy points being the intersection of two different systems, one a pitchfork and a Fibonacci, or a pitchfork and an INS, and now it could be a pitchfork and a specific time, or a time appropriate set of shadow bands. Anyway, this is not something for the brand new trader. You do need to understand support and resistance. If you don't, go back to the IML Academy and then review it there, and then come back and we go over it. It's just a knowledge accumulation. Just going to tell you guys that are expecting to see some Holy Grail or to become a master trader in 2 weeks because you binge watched everything in IML Academy. It doesn't work that way. You have to gain knowledge over time. You have to put it to practical application in volumes of setups and demo trades, so you transition from conscious to subconscious trading And then you could add more to your arsenal, but you have to, you know, you don't take a 30-minute flight in a Cessna 150 and because you're so anxious to fly, try and jump in a 787 Dreamliner and fly it. Unfortunately, it just doesn't work that way. I'm done. If there's no other questions, I'm done. I need to get out of here. Yeah, me too. A Trevino. A Trevino. A Trevino. All right, I'll take that pitchfork question, then we're done. I just got to run.